Hey everyone, this is Julian, the Professional Bum. I'm also the founder and lead trader for the Binary Options Trading Lab, Binary Lab for short. Okay, so I'm contactable on Facebook at facebook.com/professionalbum in case any of you want to make a connection, or you want to ask me stuff about trading, binary options trading. This video is going to be, as I mentioned, the topic is understanding Forex market psychology and how human psychology drives the Forex market. My specialty right now is binary options trading. I spent 7 years as a Forex trader. I decided to go over to binary options trading instead because when I first got exposed to binary options trading about 5 months ago, I understood how the way that binary options trading works. It enabled a lot of strategies previously not profitable in Forex to become very, very predictably profitable in binary options trading. Why do I still make this video about Forex? Because when I trade binary options trading, I typically trade on Forex, right? Not commodities, but I trade on Forex most of the time. So I refer a lot to Forex. Okay, so I want to give you some insights on situations where market psychology can actually play a part in the trading, and how that can affect your results, and how it's so important that you understand how the market works. Okay, so at the end of the day, right, some people are saying, well, the market's got a life of its own, or let's say, what drives the market? Well, actually, the answer is the thing that drives the market is people, right? Like you and me. Obviously, not just you and me, but everyone else out there. The banks, the governments, the big investors, um, and politics as well. So at the end of the day, is human entities that drive the markets. No single person can really shake the markets a lot unless it is done together with a few other people. Okay, so when I say together with a few other people, what that means is that most of the time, and you know how humans are, right? You heard of a thing called herd instinct. So in Forex or in whatever stocks, options, binary options, people say go with the trend. The trend is your friend. Okay. The same goes for counter trend. Because if people follow the trend has to break. When the trend breaks, it's called a counter trend. We follow the counter trend. But what if there is no trend to follow? What if there's no counter trend to follow? And why does that happen? It happens because there's confusion in the markets. Okay, so let me give you a few scenarios. I wish I turned on my trading station, but I actually turned it off today. But all right, let me do some screen drawing. Would that be cool? Let me turn on like some kind of a virtual sketch pad, and then I'll give you guys some scenarios to kind of like understand. All right, I want to make it as easy as possible for you. So let me just do that. All right, here we are. Do you see my screen yet? Probably not. Alright, you should be able to see my screen now. Okay. Yep. Yes. Okay. Alright, so the market typically chops. What I'm gonna do is I'm gonna is this the pen tool? Wait a second. Alright. So let's just give you a few different scenarios. I'm gonna just divide this in 4 pieces. Okay, so whoops. Uh-oh, mouse gone out of control. Okay, so here we go. Let me do that again. Alright, we divide it in 4. Here we go. No. What does that happen? Okay, never mind. So, First scenario, right? The market typically chops, but when it chops, to a larger extent, we still can typically find like what is known as a trend. A trend would be, you know, for instance, if I would just draw a line like that, you know, a best fit line connecting most of the points, and there'll be a trend. And this is, I mean, the first way, obviously, to kind of like to go with the market is to try to follow a trend. So in this case, the trend is one that goes up, right? So it's generally an uptrend. Actually, I would rather say, okay, this is an uptrend. What about counter trend? All right, in a uptrend, obviously price rebounds off the lines. So you could go counter trend here, you could go counter trend here, you could go counter trend here, and so on and so forth, right? Counter trend. All these are counter trend opportunities. Some are better than others. Some are. The reason for that, I mean, it's like, for example, these ones, they didn't really touch the line, especially like this one. This one, no doubt, it went down, but it did not touch the line, so it's not going to be as good. All right. And when it's not as good, what happens? Or let's say like this one. You see, like this one here didn't touch the line, and it wasn't so good. It went down only like halfway instead of all the way. Why does that happen? Because when people saw that this one didn't touch the line or didn't come as close to the line as the other ones, then people are wondering, hey, you know, maybe I'll just short this one for like, you know, a minute or 2 minutes. I'll hit and run. And what happens? Because everyone's doing hit and run, instead of like going down for the next 10 minutes, and therefore just halfway it changes directions. Do you make sense? Does it make sense? The direction change here, this direction change, happened because, right, people change their mind. Hit and run trading. Let me just put this on the next line. Does it make sense? All right. So that's one of the things that happens, okay? And what also happens? Let me give you another scenario. All right. What if? Okay. What if the price? Let me change back to black. Let me give you another scenario. Let's say the price is going like that, and then boom, and like that. Okay. This is another scenario that happens. We had one this morning. This morning session, we only had like 2 trades. Why? We typically have like between 6 to 10 trades or so within the hour session, but today we only had 2 trades because the rest look like shit. And why did it look like shit? Because the market didn't know how to react. Because, okay, let's say before this happened, maybe it was going like that. So up to that point, it was still a fairly good trend. So up to this point, you know, we could still pretty much draw a line like that, draw a line like that, and that'll be the trend. And then this funny thing happens, and then it breaks out the trend. You see, this one's is no longer there. And now you're wondering, oh, should I redraw the lines? Should I do it this way? You know, should I do it this way? You know, should I do it this way? What should I do? And then because no one knows what's going to happen, and then the price, instead of doing anything, it goes on zigzagging like that. It stays still, and maybe it does that. And when it does that, you're thinking, oh, okay, we're gonna go counter trend, right? But what trend are you talking about? There's no trend. No one knows where the damn trend is, because for all we know, you know, what you're thinking is this one, but some people could be thinking, oh, this is the trend. And then when it hits that, people say, oh, this is a breakout. And then because people thought it was a breakout, and then people started behaving like it's going to be a breakout, and everybody go woo 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 up. And what happened? You just lost the trade. Because why? You did a sell right here, and this sell didn't work out. You lost money. So what do you do? Okay, so in this kind of case, uh, why does that happen? It happens because of market psychology. People don't know where to draw the lines. I mean, they don't know where to draw the lines, and then when they see anyone buying, and they go, okay, let's all buy. And the next moment, like someone starts to sell, and it's like, oh, I still cannot see any trend, but I see some people selling, and then it's come down this much already, and then they go like, okay, if that's the case, I think it's because people are reacting to this one. They go like, okay, this is definitely going to be the top line. This is a resistance, so I'm going to start selling. And they say, oh, this could be an extension, and now I think that the price is going to go down to like actually, give me a moment. I'm going to increase my canvas size a little bit. Canvas size. Uh, it's a little more space. There we go. All right. So you go like, oh, okay, it's coming down. So I think if it breaks through this channel right here, it's gonna go all the way down here, right? And then what really happens? No, it didn't happen that way. It didn't happen. So the price didn't come all the way down there. Instead, the price, it kind of like came down to this line, and then it went like that. Happened this morning. Happened this morning. I'm not making this up. It's happened. Okay, so and they thought it's going to go down, right? And what happened? Boom, back up. And then people go like, oh, okay, I get it. Now it's a change of trend. It's an uptrend. I'm going to do that. I'm going to do that. So or maybe that didn't happen, and they go like, okay, now I see that I see this pattern, that pattern, hidden shows, whatever, and then they start making it up, and that's when the market becomes very, what is known as, nervous. Okay. So when the market is nervous, you just don't trade. When it's nervous, just don't trade. Okay, and then there are also scenarios when if you're looking at a tick chart. What is a tick chart? The tick chart is a tick is the smallest price movement. Okay, so it's not looking at graph charts or whatever. It's tick charts. Ideal tick chart goes a smooth line. All right, that's ideal. Ideal kind of a tick chart. That's an ideal tick chart. Sometimes the tick chart can be also like blocky. And this is when you do not trade. So the point I'm showing you this is that if you don't know what's happening, chances are the next person also doesn't know what's happening, and they're going to trade. I mean, and let's say if there's supposed to be a price pattern happening, but everyone is seeing different patterns. So some people are selling, some are buying, and when people buy and sell, what do you get? When people buy and sell at the same time, the price just doesn't move anywhere. It just goes sideways. Sorry, I cannot really write too well with my mouse. All right, so that's when the price goes sideways. That's when some people see a pattern and they buy, and other people see a different pattern and they sell at the same time, and they're pushing each other back and forth. It goes sideways. Not tradable. You can't do anything. And there have been days, like 2 weeks, I think a week ago, we stopped trading on Wednesday, Thursday, Friday, because the price was just going sideways. There was no tradable pattern. There's no patterns. Okay. So this is how you interpret market psychology, and you know, of course, there are things known as levels. Levels are like you know, Fibonacci levels. That's something else. Let me give you another example of that. Okay, say take this one. All right. So let's say you know, you draw a line from here to here, and they have levels like, okay, this is like you know, this is your 23.6, 23.6. This is your what, 38.2. This is your fifth. It's like maybe your 50% or whatever, and then based on this line, which incidentally, oh yeah, it touches that line, right? Oh yeah, it touches that line. Oh yeah, it touches that line. So apart from trend lines, like levels, that's something else that people like to look at as well. And then let's say if the price is making its way, if the price is like 70% of the way from 23% to 38.2, where do you think it's going to go? It's not going to go back down to 23.6. It's going to keep going back up until it hits 38, right? Or let's say if the price has already hit 50, and people are going to think, oh, it's gone up more than enough. It's going to go down. And because if a small group of people think that that's going to happen, and an increasingly large group of people think it's going to happen, it then becomes a self-fulfilling prophecy. Okay, so people drive the markets. People's reactions drive the markets. And you also notice that there's sometimes, the times when the market behaves the most methodically is when you know, people are, the experienced traders are the ones trading. Like sometimes you get newbies trading. You get when the markets are closed. Let's say it's a public holiday. The only people left trading are the newbies, not the big decision makers. And when the newbies are trading, you see a very, very nervous price action. Okay, so these are just some of the different stuff, and I teach all this stuff all the time with live charts, live examples, live commentaries with my group, the Binary Lab. So if you want more information on how to study the charts and how to interpret market signs so that you can leverage that to make more profitable trades and to prevent yourself from losing unnecessarily in the markets, you want to get in touch with me at facebook.com/theprofessionalbum and join my trading club. Ask me in a Facebook message how you can actually get in for free, and I'll be glad to give you the information on how you can come down for my sessions. I run them daily. It's usually like It's usually at 9:30 a.m. Eastern Standard Time or 9:30 p.m. Eastern Standard Time. And I'm in Singapore. Singapore is like 12 hours ahead of New York. So like if it's 9 p.m. for me here, it's 9 a.m. for you guys there. I mentioned all these timings in my group. In GMT, my sessions are usually like 1:30 a.m. or p.m. All right, so you guys can add the buffer to that. If you're in Sydney, Australia, my sessions are at 11:30 a.m. or p.m. If you're in Bangkok, it's 8:30 a.m. or p.m. These are my session times. I run them daily. I typically run 5 sessions a week. If let's say there are situations like the market's very sideways in one sessions, I may cut it short because there's no point in trying to get trades from a market that is dead. So in those cases, I make another session and come back. So some weeks we'll have 6 sessions. Some weeks we'll just have 5. Some weeks when there's funny stuff happening, we may also cut down to like 3 or 4 sessions. But at the end of the day, understand one thing. All right, it's better to have no profit than to have losses. So when we trade to win. You should only be trading to win money, because we're doing this for whatever reasons. I mean, maybe you want to trade to have a better lifestyle. You want to trade to be able to pay off your house, your car loan a lot quicker, because binary trading is the quickest way to make money. In our typical sessions, if there are no strange market conditions, we typically make about 3 to 5% per session, just on a very small 1% risk per trade. So that's what you can look forward to expecting. And I hope to hear from as many of you as soon as possible. If you have any questions, shoot me a message on Facebook or comment beneath this video. If you like my video, please click like on YouTube and subscribe to my channel, because I release videos every few days, just like this one. But for now, I think this is probably going to be one of my more my more detailed public videos, if you go into my trading group, you find that we have a dedicated Facebook group, we have a Skype chat, and there's a lot of files and documents that you can go through just to understand the market better. I've done a few webinars, line drawing tips. I teach how to do line drawing, how to use the levels, how to measure ranges, how to determine the trends and breakage of trends and so on. All that's covered inside the group, and all you need to do is to get involved with the binary lab, shoot me a message, and find out how. See you, have a nice day, good trading.